Hello. In this video, I want to answer the question, what property can a SSAS pension invest into and under what terms? Again, I'm just going to do a quick little screen share, just so we've got some headings that we can work on. So let's start off then by looking at what property purchases are allowed. Well, as far as a SSAS pension is concerned, we are limited to the purchase of commercial property. Now, this can be freehold or leasehold. Freehold means owning a property outright and in full, and leasehold means holding a property for a specific number of years in return for paying a rent to the freeholder. So if you think of a block of offices, all owned by different people, they cannot all own the single plot of land that they're piled on top of. The individual offices would therefore be leasehold, and whoever owned the land would be the freeholder. So what kind of commercial property could we consider? Well, offices would be one thing, industrial business units and warehouses, agricultural, forestry, development land, garages and car parks, nursing homes, pubs, hotels, as long as it is part of the whole building and not certain rooms. So what can't a SSAS purchase? Most people would like to buy residential property with their SSAS, but this is only allowed in certain circumstances. The residential part of the property must be an integral part of the commercial part of the property. An example of this would be a flat above a shop, which is occupied by the shop manager as part of their terms of employment. It's important to remember here, though, that the employee cannot be connected to any SSAS member. Other properties that a SSAS can't own include holiday lets, timeshares, beach huts, and individual hotel rooms. Now, the list of things that a SSAS can buy and can't buy are not exhaustive. And if you've got something specific in mind, then it would be worthwhile having a conversation about that so we can check into it a little bit further. Can a SSAS borrow money to pay for the purchase? Well, yes, it can. HMRC say that the SSAS can borrow up to 50% of its value, less any current borrowing, and money can be borrowed from a bank in the form of a mortgage, another scheme member, or anyone else who is willing to lend the SSAS some money. If SSAS members are lending the money to the SSAS, the terms of the loan must be the same as what a bank would lend on. It's got to be done on commercial terms. Otherwise, we're going to lay ourselves open to tax penalties, and we know that these can be very, very punitive. Don't forget that you could also transfer any of the pension policies that you have into the SSAS to bump up the cash that's available. Now, a SSAS can also jointly purchase a property with someone else, another company, another pension scheme, or an individual. The purchase doesn't have to be on equal proportions either. Can a SSAS register for VAT? Again, yes, it can. A property is either subject to VAT when built, and many new buildings are usually automatically registered for VAT, or can be elected for VAT, such as for development work. If a SSAS is registered for VAT, it can claim VAT on the purchase price plus costs for redeveloping and refurbishing. However, this does mean that VAT will be charged on both the rent and the sale price when the property is sold. What about developing land? Well, again, that's not a problem. A SSAS can develop land as long as no residential element is added. You are able to buy land and apply for residential planning permission and even start works on the site. The key here, though, is that it must be disposed of before it becomes habitable. So what kind of costs are involved? Well, it's the same as any other property purchase. There are always going to be fees to be paid. These would include solicitors' fees, stamp duty, land tax, possibly VAT, and lenders' fees if the SSAS is borrowing money. All of these costs are paid by the SSAS, however, but you need to remember that when thinking about your funding plan, that you've got costs that will be incurred. What about legal issues? Well, a solicitor will need to be appointed to act for the SSAS in the purchase of the property. They will need to see an environmental survey and full searches on behalf of the SSAS. This is really important, as if the property or its land is contaminated and the polluter cannot be found, then the owner is responsible for paying to clean up the site. It would not be a great investment on behalf of the SSAS if it purchased some land without a survey, only to find out that they're now responsible for thousands of pounds in clean-up costs on the site. Considerations also need to be given as to whether the property contains asbestos products. Can my SSAS buy property owned by my company? Yep, you can do that as well. And there are some advantages in doing this. Tax relief is received on any contributions paid to purchase a property. Costs and fees to buy the property are payable by the SSAS. The property is protected from creditors in the event of company insolvency. Growth in the value of the property when sold is free of capital gains tax. Rent paid provides a regular income, which is free of income tax, and rent is an allowable business expense against the company's corporation tax bill. Now, you just need to note that here that this purchase is a connected party transaction. This also applies if you are purchasing from another person or company that is connected to you, for example, a family member, your wife. Now, this means that the property needs to be purchased on an arm's length basis. So the property will need to be valued by a qualified valuer, so to make sure that a fair purchase price has been paid. If a SSAS is buying property from someone totally unconnected to the scheme and its members, a price paid that has been negotiated between the buyer and the seller is perfectly acceptable, and a valuation is not going to be needed. Now, there is also another way of swapping ownership of a property owned by your business into your SSAS. And this is by way of a contribution in specie. It basically means that your business has made a contribution to your SSAS, but it hasn't been made by a payment of cash. The value of the property is the contribution. The value of the property becomes the monetary amount of your contribution, and the company receives tax relief on the value of the property. Stamp duty, land tax, and the usual fees will still apply, however, as you have changed the ownership of the property. And you can do this over a lengthy period of time. Now, what happens to rental income? Well, the rental from tenants is free from income tax and is paid into the SSAS bank account. It can be used to fund borrowing repayments if the SSAS has borrowed money for the purchase, or it can be built up as a tax-free cash reserve, or it could be further invested. Rental income can be treated by the tenant as a business expense for tax purposes, and therefore can reduce the income and corporation tax liability of the tenant. This is especially great if you've purchased your own business premises. Now, as for the purchase of the property, if the tenant is a connected party, the rent paid will need to be valued at open market rates by a qualified valuer. HMRC ask for this to ensure a connected party is paying the going rate for rent, so keeping it as an arm's length transaction. If the tenant is not a connected party, no rental valuation is needed. Do I need a formal lease? Absolutely. Your SSAS can lease a commercial property to anyone, be it your business or somebody completely unconnected to you. If the lease is your business or someone else connected to you, it must be done on an arm's length commercial basis. And we would expect a tenant to enter into a full insuring, repairing lease. Who looks after the property going forward? Well, you do it. It's, you have to do the invoicing to the tenants for the rent and chase for payment. You will let them know when rent reviews are due and when the lease is due to expire. And you'll also need to look after the SSAS VAT returns if these are applicable. You'll need to insure the property, including public liability insurance. Alternatively, you could appoint a professional property management company if you prefer. Anything else that you need to think about? Well, please be aware that a property is an is an illiquid investment. If it needs to be sold in a hurry, this may not be possible. Also, if you are taking a pension from the SSAS, you may be reliant on the rent received from the property to pay your pension. If the property is vacant for a while, the SSAS will need cash to carry on paying pensions. And at this time, it will also need to pay for insurance, council rates, utility bills, etc. And a very good cash reserve may be needed. So I hope this little video has given you a good insight into what property investments can be made by the SSAS. Thanks for watching, and hopefully we'll see you again on another video. Goodbye.